Good evening, ladies and gentlemen. Welcome to Reference Point. I'm your host, Dave Cokerhook, and this evening we're going to be talking about some elements of technology. And the technology we're going to be talking about tonight is a technology referred to as blockchain, which I'm suspecting many of you have heard about, but if you're anything like me, when I was talking about this and learning about this several weeks ago, I wasn't really clear on exactly what it meant. But with me today are two fantastic people who are going to help clue us in on what this technology is and how it can potentially be utilized. And first, immediately to my left is Amie Gray, who's the CEO of N-Cubed Innovations here in the Silicon Valley area. Amie, welcome.
Thank you, Dave.
And you're a returning guest here at Edgeport. You were here once before.
Yes, and we talked about the fourth industrial revolution.
That's right. And this kind of fits right into that too, doesn't it?
Yes, it does.
Fantastic. And also with me today is Henry Fan. Henry is the Managing Director for Crossvine Capital. Henry, welcome to Reference Point.
Thank you very much for having me.
I'm really glad that both of you are here today. So I think that a place to start, if we're talking about this concept, is how do we define this? What exactly is blockchain in a way of a technology? And Henry, I'm going to go to you first.
Sure. So blockchain has been here for about 9 or 10 years. So essentially, blockchain is a distributed ledger. In other words, if we do bookkeeping and we tend to put a record there, we keep the record of, let's say you have a bank account, and it tells you what's your name, what's your social security, and how much balance you have and all that. But all those things are stored in the centralized place, for example, a bank or something. What blockchain technology does is that it's a distributed ledger, which means that you have a block. Every block has a fixed size, depends on what type of chain that you use. And then the information is being kept within this block. It typically has 3 essential informations in there. One is the hash number for that particular block. And one is the
hash number, meaning it's like an identification number?
It's a one-way kind of encryption for calculation for that kind of a hash calculation for that content.
Okay.
So if anytime you modify that content, the hash is different.
Okay.
So it has the hash for that particular block, it has the hash to point to the previous block, and it has the content.
Okay.
So it's get distributed and stored over the internet by all the systems, and everybody keep exactly the same record.
Now, is that the systems that are tied into that transaction area, or I guess a chain is something that you use for a particular purpose, right?
Right.
But if you're not involved in that purpose, that wouldn't be on your computer.
Right. So if you participate, the computer can participate. You can choose whether to participate in that part of the chain. And that's where people are talking about mining and all that. We can talk about that later. But essentially, get back to the question, is that it's a distributed ledger system, and that's the underlying technology where the very first application, it's the Bitcoin everybody knows about. It's implemented on top of the blockchain architecture. And essentially, it's just way of keeping record, but in a very distributed manner and in a very encrypted manner. And so it provides certain authenticity and a trust and all of that. And it revolutionized the overall industry just precisely for that reason, is because it get away from the decentralized. You have to have one centralized authority to manage that record. This allows everybody to participate in that, to be able to trust each other and have exactly the same record.
Okay.
So maybe I can clarify with some very common day language.
Oh, yes.
If you don't mind.
Yeah,
thank you for
please.
that. So when we send an email, we send it over a protocol called TCP/IP.
Right.
And that's the internet protocol that people are pretty much familiar with. But we don't even really think about it anymore because it's just there. So over the internet, we can send an email, but when we send an email, we don't really send it. We send a copy of that email so that everybody who we want to get that email receives it, and TCP/IP takes care of making sure it gets to the right place. So that's all great, but that doesn't work for money. or assets or anything that you don't want to duplicate, things that you actually want to transfer ownership from one person to another, like money. So blockchain is a way that acts like a protocol, sort of like TCP/IP, where it's distributed over the internet, just like TCP/IP is no like one place, neither is blockchain. But it makes sure that the asset is taken away from me and given to the person that I want to give it to. And I don't necessarily need to know that person because the distributed ledger creates the trust. Today, if I want to send an asset, I send it through a trusted party like a bank.
Right, right.
And in the blockchain world, I wouldn't have to do that. I can send it to somebody I don't know, or I can transfer the asset to somebody that I don't know through the blockchain because they take care of the verification of my identity and the receiver's identity.
So how do they do that? How do they verify these identities and things? What makes this environment one that I could then say, I don't have to worry about who the recipient is or the trading partner is because, you know, the system is saying it's okay. What are they verifying?
Just like I don't know your IP address, but it still gets to you. You have an identity on the blockchain. Maybe you want to say more specifically.
Yeah, so I think there's still a lot of things to be resolved to, you know, end up using it for, you know, the real application. But the concept is really that, you know, there's, if you claim you make certain claim about who you are and all that, and that has to be verified in certain ways. And because the verification, because also the people or the parties who involved in that transaction, they define certain criteria, what we call it the smart contract and all that.
Okay.
And then with that, you're able to provide the level of authentication and then, you know, to verify that true authenticities of that information. So I think it used a lot in, you know, in the identity management and all those space, where I think there's a lot of movement also in the industry. It's about the permissionless, you know, how you can, what they call it, the self-identifying your, you know, your information. Let's say you claim that you graduated from Harvard. So there's got to be a third party without you giving out the information to, let's say, a person saying, okay, well, let me show you whatever. But there's another party involved in that transaction, in the smart contract, for example, able to verify that information. So your information, your identity is not given away, but it's being verified.
Okay.
Yeah.
Interesting. It's still, and I suspect I'm no different than like 98% of the people that are out there that have heard this. It sounds interesting and it seems exciting, but it's still a little bit confusing.
It's very similar to when the internet was born. We're at the same sort of stage, you know, when people thought, oh, this is really interesting, but I have a brochure and, you know, my phone works perfectly well.
Right,
you know, it's sort of like that. And we're in that same sort of stage where it is an interesting technology. There's a lot of potential. People are talking about how to use it. There are still issues that need to get worked out. It's not 100%. There are some, of course, people out there that are using it in nefarious ways. At the same time, there's people who are using it in very good ways. So it's all about figuring out how it's going to work and where it shakes out. So we're very, very early. So it's not, it wouldn't be expected that you would know exactly what to do with it or how it would work. Because I don't know that anybody.
That's helpful. Makes me feel better. Thank you, Amie. Henry had actually sent us a, it was a very short video. I guess it was from CNET or somebody that had done this, and it's about 1 minute and 30 seconds long. That is an attempt to try and describe something for the layman, and I thought I think we're prepared to run that. If we can do that, guys, this would be kind of fun to see because it's quick, but it's very informative. So if we're ready, let's do that.
Blockchain is a network of computers that polices itself so people or businesses can cooperate without fear that somebody is tampering with the data. Today, most data is sealed up at a central organization like a bank or the Department of Motor Vehicles. Blockchain moves that information to a decentralized, shared network of computers, maybe even thousands of them, to create an open, transparent, immutable database. That data could include everything from sales transactions to medical records. It's called a blockchain because computers periodically collect transactions into groups called blocks. Each block gets a digital fingerprint called a hash, and each new block's hash is cryptographically linked to the previous block's hash, basically forming an unbreakable chain. Any tampering with a transaction is easily detected and rejected because it messes up the hash not only of the block it's in, but also every other block added afterward. If a tampered block is on your computer, the rest of the blockchain network just ignores it. In the future, for instance, there may be a blockchain network for concert ticket sales. You want to buy a ticket from a stranger, somebody you might not trust in the real world. The blockchain takes care of confirming that the original owner is legitimate, hasn't sold the ticket already, and that you're the new owner. Then the network locks the data. Many companies are investing in blockchain, and many more are investigating it. Walmart is testing blockchain so it can quickly pull contaminated food from store shelves, and De Beers is tracking diamonds so you can be sure those anniversary earrings didn't fund somebody's war. You might not notice blockchain as it makes businesses run more smoothly, but more directly, it should bring you peace of mind.
So one of the things that was real interesting to me about that when they were describing it was giving this, they used the analogy of a block or this informational capsule has what they refer to as a digital fingerprint. And that made sense to me. And I guess that's what the hash is, right?
Right, exactly.
So it's a way of saying that this is certain information and it's been vetted and this is what it is. And if anybody tries to muck with it, then it changes the whole structure there, and it's not the same thing anymore. It's a completely different thing, and that would potentially make it possible for someone to recognize that somebody's been tampering.
Yeah.
That's cool.
Yeah. That's exactly the feature of this is, and then it's built into this overall blockchain architecture. Once you calculate that block, it's need to be sort of everybody on this network need to accept that block and update themselves, right? So, so whoever the computer that provided was that the first outcome and the result, and then with the hash, and then to be distributed and accepted by all the other nodes, what we call it, on the network. And then so if anybody start to change that, first of all, there's multiple copies of that. And secondly, if anything you change, it's the hash will match, because every time it will recalculate, it will check the cache. If the hash is wrong, that means the content has been tampered with.
Right.
So that's the fundamental of that. Now, because the computing power is increasing, every year, every minute, there's a possibility that the computer is calculating fast enough. In other words, that if one computer is calculating really, really quick, he can try to recalculate everything and then reattach everything to that. So in this blockchain sort of protocol architecture, they have a way to kind of, for any computer, in order to participate in this, has to finish certain computation tasks and to purposely try to slow down so that you're not calculating fast enough to modify all the blocks.
Right. So we're not going to move on until this is done. It's sort of like a bit of a regulator onto these two things.
To make sure that no one supercomputer is stepping in to kind of say, I'm going to, overwrite all the other.
Right, and then mess up the thing. So I have a question I want to ask you about this, but before I do, I want to let the people know we've got such an interesting topic, and I'm sure we're going to leave some questions unanswered. So if you have any questions about what we're discussing today, send them in to us here at info@referencepointtv.com. I'll get them to Amie and Henry, and we'll get your questions answered and get it back to you. So one of the things that you had mentioned earlier, the two of you, was public versus private blockchain stuff, and I'm trying to let's talk about that a little bit and what that means, because I kind of get the impression that the private chain concept has to do with, maybe that ties into specific use cases or industry utilizations for the underlying technology, I think, but I'm not sure that that's accurate. So, Amie, where am I on this?
Well, just like we have private and public cloud infrastructure. So, and I don't know if that's clear, but like a company can implement its own IT infrastructure on cloud.
Right.
And you can have your own private space. So some people are deciding that that's a better way for them to get started on blockchain. And then they can control who's in their network, on using that, who's using their blockchain. Some people don't think that that's necessary. Usually it's somebody who doesn't have the resources to do that. So they say, let's just join the public blockchain, and we'll run our application or ICO or whatever we're going to do on top of that.
Is there a public blockchain?
Is there a internet? It's the same idea.
Yeah, so I think, the most common sort of Ethereum, for example, and all that are considered to be public. Right? So most of the implementation or application, what we call it, actually utilize the Ethereum, infrastructure, which essentially you can call that a public chain. But a lot of, when you implement your own sort of application, let's say let's say Dave, you decide I'm gonna write my own code to authenticate of doing something, right? So I want to, let's say I'm selling my digital content online or something. You can develop that application. Now you don't have to do all the, what we call it, the infrastructure yourself. You can just utilize one of those.
Got it.
And then, but you can write a bunch of features and all that, develop on top of that. Now, the whole community about the blockchain is that you're supposed to, or the best practice is you contribute back to the community. So you put this back onto the GitHubs and all that, where and that kind of a code is open source, and then the other company can use it.
So it can enhance other utilization.
But there's also big companies such as, IBM or Visa or something. They can decide to completely implement their own ecosystem of chain and infrastructure. And when they do that, they can run all their own application, whether it's banking or, international money transfer or, Forex trading or any of those on their own chain. And it's private, it's, whatever that's, they don't have to, in theory, that number one, contribute back, or number two, publish any of their stuff.
Right.
So that there's, that kind of a, difference. But most of the time, you can use, a lot of companies that I work with, they eventually decide that at some point in time, especially when they start to go ICO or after ICO, to make their thing public, to be open source. So they call it the public chain. So
I, excuse me, I want to get into this concept of ICO in a moment, but before we do, one of the things that I think most people think about blockchain in the reference to cryptocurrencies like Bitcoin, or what's the other, Ethereum, or where I hear Venezuela's starting one, and the Russians have their own cryptocurrency. Everybody's got a cryptocurrency, okay. And people think of it in terms of that, but the utilization possibilities seem to reach far beyond that. They kind of mentioned some of that in that quick video. Okay, so can you give us a couple of examples of use case concepts that would make sense for this sort of technology?
So I'm working with two companies that are looking at blockchain today for somewhat supply chain reasons. So two different examples. So one is a global logistics company. And so in logistics, historically, there's been many, many points where you have to pass off things. So there's the trucker, then there's the rail, then there's the boat, the ship, and then you're back to the trucker, the rail, or the ship, or you're kind of going through all these steps. And at each one, you're passing off goods from one person to another, and you're saying, yeah, sign on this piece of paper, or at best, on the tablet, which goes into the same system where the piece of paper would go. So there's not been real innovation in that entire supply chain process. So the way of knowing where goods are at any one point and how they flow across that supply chain is a use of blockchain. Similarly, food companies are starting to look at blockchain for the concept of farm to table. So how do you know where the food came from? So that's one application. But second is for food safety. So if I know that there's an issue with the food, where did that come from? So the traceability of the ingredients or the content of that food is a lot faster than it would be traditionally. So if the two use cases, one is for consumer information and the other is for food safety traceability.
Interesting. That makes sense. I had read something about, someone was talking about the potential utilization of the blockchain technology in a voting environment. So, you know, and other
Voting, tickets, healthcare.
Healthcare, yeah.
Yeah, there are a few industry that's really can, you know, be what we call it disrupted by blockchain or most benefit from, you know, the blockchain technology, including obviously the finance industry, you know, the payments and all that. And then you mentioned about healthcare is definitely one of them. Logistics, the IoT type of, you know, supply chain management, and even real estate. With all the transparencies and all that that can provide, record keeping, you know, all those things.
So if everybody were to say, hey, this makes sense, let's start adopting this right now, is the infrastructure capable of accepting a massive adoption of the technology right now?
That's a good question.
Yeah.
I think, but blockchain at this moment, it's very hard. I mean, in order for any of those applications to really be in a massive scale. So think about if you go to Western Union to wire money or something, or if you go to a store to make a payment, you're not going to stand around for 10 minutes or something until the stuff to get processed. So for any of those applications to be really working in the real world, you need to have two big, you know, attributes. One is the scalabilities. One is the performance, right? So at this point in time, as far as I know, it's really hard to find any applications or blockchain implementation at this point in time that can resolve two problems at the same time, both problems. They either address the scalability issue or they address the performance issue, but they cannot solve both of them. So until both of them are really catching up to a point, and obviously, as we mentioned earlier, that you don't want, you also wanted to take care of the fundamental, you know, kind of a nature of this blockchain technology is that to eliminate the kind of, you know, middleman, the man in the middle type of, you know, hacking. So how do you resolve, you know, protect that, but also implement those two attributes in order for the massive use? I think that's where the key challenge is. But I think there are companies who come up with, you know, incremental solution on both, you know, on either end, to either make it to be, you know, scalable for a payment system or something. So I know a couple of them, you know, in fact.
So it's coming. It's not quite there yet.
Yeah.
So we have about 5 minutes left in the show here. So I want to go into this term that we've used a few times, ICO. What is that acronym? What does that mean, Amie?
ICO stands for Initial Coin Offering.
Okay.
You can think of it, I mean, it rhymes with IPO, but it's not quite the same. But it almost is. It's like launching your own currency. And you know, anybody can do it. The question, it's back to the analogy of the internet. It's kind of like launching a website back then. You could launch a website for anything, but is it actually going to do anything for you? Is there any way to make money with that website? So an e-business back in the 90s, some of them didn't exist, and because there was really no business there. The same thing with ICOs. ICOs, some are tied to a business, and it makes sense for them because there's no banking relationship in some areas, or they want to be able to raise funds where they can't do it for whatever mechanical reasons that they have today where they're blocked. So in some cases, the ICO makes a lot of sense, but there are few and far between where the ICO actually is backed by something of hard value these days.
And
At least
Henry,
that's my opinion.
You've had some experience with this both here and in China, is that correct?
Right. So, you know, ICO, again, put in the, you know, common term, essentially it is crowdfunding in some ways by nature. But it's very sensitive topic because there is not a regulatory sort of kind of a regulation at this point in time to really, set the standards and all that. In the eyes of SEC, in terms of ICO, you cannot, if you involve the ICO in what we call it, which is equity token versus the utility token. That's, I'm introducing two words here. Utility token, where you issue the token is actually being used in some ways. Let's say, for example, your token is used to exchange your value of service or something like that.
Okay.
But in a lot of cases where a lot of ICOs tend to use this as a fundraising vehicle, and then it is a fundraising feature, but if you're just issuing the ICO as a owning part of this business, and hopefully the business value can go up, and then you can cash out.
Yeah.
In that sense, it's not permitted in some ways by the current SEC standard. In fact, if you read the most recent comment, you'll see that their opinion on that.
Yeah, interesting.
But the ICO in a lot of ways is that there's also different stage of ICO. It's called private raise, pre-ICO, public ICOs.
So, given the fact that there's so much going on in that arena, and that it is somewhat new,
Wild Wild West.
Yes.
Wild Wild West.
Yes,
Okay.
it is.
So, and you see these opportunities all over the place. What would you say? And we got a little bit of time. We got a minute and a half left in the show. What would you say for someone who is presented with something that has an ICO type opportunity to it? I'm interested in both of your thoughts. We'll go to you first, Henry.
If you're just being presented ICO, I mean, one of the things in any of the ICOs is you need to have a white paper. Okay, so the white paper describe what the business is, what the token is, how's the token being used. The whole, essentially, it's a business plan in details about that. Now, if you really, really wanted to understand, and not saying that all the white papers are very well written and easy to understand,
Sure.
But if you're really serious about that, first thing you got to read the white paper.
Got it. So do your homework. In other words, if it's legitimate, there's going to be solid information. Do your homework. Amie?
Yeah. So I work with corporate clients, and we're generally saying don't bother right now. We're saying it's not worth it to do anything with the cryptocurrency. What we are saying is look at blockchain as the underlying technology and how to leverage that as the first move. Now, if cryptocurrencies become more standardized, regulated, all of that stuff, then it's time for a business to start looking at it more seriously.
Cool.
Right.
Well, we're running out of time here, unfortunately, so I really appreciate both of you for coming. And this has been very informative. Ladies and gentlemen, I hope you've learned something. I know I have. So, Amie, thank you for being here. Henry, thank you for coming to Reference Point. And ladies and gentlemen, we'll see you next time. Bye.